Good evening, ladies and gentlemen. Welcome to Business Today Television. In our ongoing series of Market Gurus, we make you meet with analysts, stock pickers, fund managers, equity strategists, and a lot of people who have a deep experience in stock picking, creating wealth for the long term, and making superb portfolios which generate wealth over an extended period of time. Our special guest today is Mr. Sunil Shah. He's the fund manager at SRE Equity and a hardcore equity strategist over the last 3 decades. Mr. Shah has spent considerable time at some of the finest equity stables on Dalal Street. Among them, he was the head of research at Inam Securities between 2009 and 2018. Before that, he managed money at ABN AMRO Bank and has spent considerable amount of time, more than 10-12 years, with some of the finest broking houses in India. Mr. Shah is a very well-known stock picker. Apart from that, he is an extremely shy gentleman whom you don't see very often on public media. It's a great pleasure to welcome you, Sunil Bhai, on Market Gurus series on Business Today Television. Thank you for sparing your time with us.
Thank you, Shelji, for inviting me. Thank you so much. Thanks and your kind words. Thanks.
Okay. So, Sunil Bhai, what we are going to do is that we'll break this show into 2 segments. The broader markets where you see value added coming into stock prices, and where do you think the sentiment is placed at the moment. And apart from that, you will help us and our viewers create a long-term portfolio by nailing down specific events on how do you analyze a stock, how do you pick a sector, and so on and so forth. So without further ado, let's begin with the views that Sunil Bhai has on markets as of now. So Sunilji, we are at the cusp of a great bull market on Indian equities. We see record highs everywhere, whether it's the auto index, the pharma index. There is a huge amount of value being unlocked in the public sector space, and we've seen record highs fairly recently on the Nifty and the Nifty Bank. Given this background and the pain that we are now seeing in terms of global inflation as well as other macros which are slowly getting out of whack, how do you think equity markets are placed at the moment?
Yeah, thank you, Shailji. So right now, the entire thought process is, let me put it in very simple terms. Everybody in the market tries to look at sector oriented, as you mentioned, auto index, bank index, and maybe the PSU index, etc., etc. So the way in which I would like to approach the equity market is try to go to the core of the earnings. So if I pick up any sector or any company, to my mind, the core of the earnings is driven by certain themes. So I approach it in this fashion that either the company is connected to domestic consumption or demography, or it is connected to a global environment, or it is connected to government policy, or maybe infrastructure, or maybe, interest sensitive. So these are the 5-6 pockets in which the core of the earnings of the companies are placed. And as we are speaking right now, practically each and every theme is, it's a confluence of positive things happening in almost every theme, barring the global environment. So if your company's future or prospects are connected to the global environment, there is a little bit of, dark area over there. But apart from that, any place which we go, whether it is consumption, infrastructure, etc., all of those things are driven in the markets. So that's why we are seeing that various sectors, various companies are taking the lead and is driving the markets. But for the first time in last so many years, it's a confluence of all things working simultaneously. So whether it is infra oriented things in terms of road development, power projects, railway capex, that is coming into play. If you talk about interest sensitives, we are having a soft regime and the world is having a very high interest regime. So it's playing out in terms of if companies are doing capital expenditure here, money is available at a relatively cheaper cost. So that is driving the things there. So all those factors are playing out. It's not just domestic theme. So pointers in the equity markets at this point, it's about finding the right business idea and staying invested. That is where a lot of money will be made, and it's not just going to be one sector or one theme. It's going to be multiple opportunities. So that's the way I'm looking at markets, and that has not been the case earlier. Because if one thing was working in the past, something or the other would, plug the rally. That's not happening, and that is a very, very positive thing for the equity market as we are speaking right now, Shailji.
Right. So, Sunil bhai, you've put it really well. We are at a Goldilocks moment as far as the Indian economy is concerned, and of course, that is reflecting very well on the broader market sentiment as also major indices. You come from the old world, of which I am also one of the residents, and both of us started our lives when the paramount importance in the market was of an index called the Sensex. So, my basic question to you is, where do you see it in a year from now? What kind of valuations are we at now? Are we overstretched? Do you feel pain when you see stock prices, or you still feel in your gut that this rally has more legs to go? Where is the Sensex headed in 1 year from now?
Yeah, Shailji, so I would try to look at it in this fashion. If I just go back before COVID, the Sensex then was around 42,000 levels. And then we had the COVID era, the COVID period, when the Sensex really crashed to 26,000 or so. But the normal growth rate of Sensex is connected to the earnings growth of Sensex. And that is somewhere around 13 to 14%. So even if I just extrapolate the 42,000 number of February 2020, just before COVID, and look at, right now or 4 years down the line, that same 42,000 compounded at 14%, which is the underlying earnings growth, should be somewhere around 70,000 mark for February 24. So that is just talking about the earnings growth in number and translating it into a normalized basis for the overall Sensex. So you reach from 42,000 to 70,000 or thereabouts in the next February 24 or so. And if you look at 1 year forward, if you try to look at February 25, 14% to that 70,000 mark, you reach to about 78,000 or so. So as long as the earnings of the companies in Sensex are going to go up, Sensex will keep on registering new highs. Of course, it would be a volatility thing. It would have its own cycle of up and down. But overall, as long as GDP of the country is growing and we are having growth all around, markets and earnings will continue to do well. So I'm just trying to put a normalized number of 42,000 of pre-COVID and look at it 1 year down the line, which would be in the range of 70 to 77,000. So that's the way I'm trying to look at it. Just plain simple way. That's it, Shaikh.
So, for those who presume that it's by some magic that the Nifty and the Sensex make record highs, it's a very simple explanation that such indices are, how should I say, handmaidens of earnings growth. Earnings growth in India, at least for the Sensex and the Nifty companies, are expected at about 12 to 14% per year, and that is the compounding rate of the Sensex in the longer term. So, ladies and gentlemen, Sunil bhai thinks you'll see somewhere like 77,000, 75,000 on the Sensex 1 year down the line, and this is how he feels that these growth will come in. Sunil bhai, any specific sectors within the Sensex or the Nifty which will power this rally ahead?
Yeah, Shailji, so as we are talking about sectors, my sense is, if I look at 3 to 5 years down the line, our per capita GDP, which is something around 2,800 is likely to inch up to about 4,500 or thereabouts.
Yeah.
And if that per capita GDP is going to grow, then we will have huge amount of specialized services, which would be a part of our daily utilization. So let me just give an example. Well, if we talk about the entire financialization of savings and money coming in equity markets, you have a specialized company like a CDSL, which is practically a duopoly business. and their business is going to grow automatically. Similarly, you will see money getting channelized in the mutual fund industry, and you will see money coming in from the bank deposits into equity markets. So you have players who provide those services like a 361 or an Anand Rathi or a Prudent. So those are the specialized service. Those are niche. CMS, for example, which does cash management for the entire banking system of the country. So those business have very strong moats. They have very high margins, as high as about 40-50%. So traditionally, money was made in a Hindustan lever, which was high margin, high ROE business. Now you will see these companies which have high margin, high ROE, coupled with higher growth rates. So their growth rates are upwards of 20 to 25% in terms of earnings growth every year. So the multiple expansion will still continue to happen in such specialized services where there is tremendous operating leverage and very less capital required for incremental growth. Those are the essence of a winner, and I think that's the way I would try to look at in the next leg of markets. Those would be the areas where I would try to go and hunt my next emerging winner over there. So that's the way I'm looking at it, Shane.
Right. So let's just drill it down individually into Sensex heavyweights. All of us have tracked Reliance Industries for now nearly 3 decades. That also includes State Bank of India, HDFC Bank, and all. These are companies where you and I have grown up with. We've also grown up with a number which is somewhat magical for the Sensex, a 6-digit number, say 1 lakh on the Sensex. One, when is that happening? And I'm sure it will. You can be wrong by a couple of months this side or that. But what are the 2 or 3 companies, 4, 5 companies that will par the Sensex to a lakh somewhere in the near future? And what could be their annual profit numbers that you might look at on your Excel sheet?
Yeah, very nice question, Shailji. So I think that's 1 lakh mark is a magical number for people, and all people want to know about when that number will be achieved. So for me, as I stated, Sensex is nothing but a derivative of the earnings of the companies of Sensex, and stock prices are slaves of earnings. This is something which is a very old school statement. But end of the day, I think the big boy, Reliance Industries, which is roughly about 65,000 crores of annual profits, I think in the next 3 years or so, Reliance will inch up to that 1 lakh crore mark. And after 3 years, maybe in the next year, we will see an HDFC Bank, which is now, the twins, HDFC twins, which are now become one baby. That company will cross that 1 lakh crore profit mark year after Reliance Industries. SBI might do it at the same time at which HDFC Bank will do it. And after a couple of years after that, you will have TCS coming and registering that 1 lakh crore profit mark. So I think the time at which all these big companies cross that 1 lakh crore profit threshold mark, we will also see Sensex come somewhere around that mark. So it's about next 4 years or so in which, all these companies or maybe 2 or 3 of them will cross that magical mark. And that would coincide with the Sensex crossing the 1 lakh mark. So Shelji, it's not about really timing the number as such, but it's about taking a directional call, and I think that is certainly going to happen because of the way in which the big boys or the big companies in our country are growing, and the profit numbers will reach that number. So all put together, we will see those things happen in the next 3, maybe 4 year time period from now. That's the number which I think will happen. Yeah,
Right.
Shelji.
So if you are, if you have that dose of patience in this market, and both Sunil and I are convinced that that number is reducing, and very few of us are left who have the patience to have an investment horizon of more than 5 years. Remember, the golden period of Indian equities has almost begun, and if you buy quality and insist on keeping quality in your portfolio, you are the one who's going to compound and make this phenomenal return that is definitely going to come. You can be off the mark by 12 months here and there, but the magical number of 100,000 on the Sensex will definitely happen, because it's a mathematical result of how earnings grow of component companies that make up the Sensex. Now that the broader picture has been drawn, Sunil bhai, let's come to the basics. You are here to make a portfolio at a time when the markets are at a record high, although 2 3 years hence this number will look very small. How are you sort of starting your day in the morning? Where are the multi-baggers hidden, and how do you sort of begin hunting for a quality stock in this list of about say 5,000 that are listed on the exchanges in India?
Yeah, Shailji, so yeah, there are about, as you stated, 5,000 odd companies which are listed. But if you see the top 500 companies, they account for almost 95% of the total market cap. Now, even in the top 500 companies, which is 95% of the market cap, the top 200 companies are over researched, meaning that's something which practically every mutual fund, every FII, every big investor would be aware about it. So, the margin of making anything abnormal in a very efficient zone is going to be very difficult. So the hunting area or the work area for me is to probe the companies which are in the range of 201 to about 500 in the ranking of market cap. That's the where big money will be made. The market cap range is something around 2,500, 3,000 crores to about 25,000 crores or so. And the growth in price from a 3,000 crore to a 6,000 crore will be relatively easier than a 2 lakh crore market cap becoming a 4 lakh crore market cap. So I think for me, the work area remains in that zone of looking at companies in that 201 to 500 category, where next big money will be made. So the parameters remain the same, meaning the successful parameters of, let's say, TCS, which is high cash flow, high ROE, debt-free status. That's something which you probe in this category, and also try to see if there is anything abnormal that the company is doing. By abnormal, I mean that is it driving the earnings of the company in the next 3 years versus what they've been doing in the last 5 years or so. And if the earnings are going to be driven in the next 3 year period, then there is a case for a re-rating for the company as well. So those are the simple checks and balances. I think we make it too complicated in our market when things are actually so simple. So the more the simple we do, try to do things, the more better the results can be achieved. So that's the work area which I probe into. That's the companies I try to research. That's the company I try to meet and understand and see if that alpha of growth in the earnings is going to come in. And if I get myself convinced, that's where I try to do more work and act on it. So Shailji, that's a work area.
So we've touched upon macro, and we've also touched upon how to hunt for these wonderful stocks that are actually hidden gems at the moment, and they burnish and they shine once earnings growth as well as sales growth sort of goes beyond the second deviation of the mean. Now, Sunil bhai, you've sort of outlined your thought process in the market, and the fact that we are at the cusp of a fabulous rally even from these levels on major indices as also on several stocks. So, what are the 2 or 3 stocks that you've added in your portfolio for your PMS clients over the last 2 or 3 months? If you could share some names, and then maybe we could discuss the logic behind it. Let's be market cap agnostic. Tell us where do you find the maximum value at current prices?
Yeah, Shailji. So great question as always. Shailji, so one of the companies that I have recently added in the portfolio is Gabriel India. Gabriel, to my mind, meets my requirement, which I'm looking for in terms of explosion in earnings due to some activity that the company has done. And if I can dwell more on Gabriel and share the thought process. So in case of Gabriel, the company was traditionally in the business of shock absorbers for the passenger cars and the commercial vehicles. In the month of May, company has tied up with In Alpha for sunroof systems. So Gabriel, which was traditionally doing a product which was around 2,000 to 20,000 rupees per vehicle, will now get into sunroof system, the value of which starts with nothing less than 50,000 rupees. And in Alpha is the world number two in this activity of sunroof system. So they will put up a plant in the fourth quarter of this financial year, and the numbers will start coming in from the next financial years for the next 3 years. Now, this product of sunroof system is an 100% imported thing in India. So something which was not there in the country, something which is being made here, will give Gabriel the necessary impetus of earnings growth. And my parameters remain in terms of debt-free company, in terms of cash on the balance sheet, in terms of their track record of more than 30, 40 years of excellence and having relationship with almost every OEM in the country. So those are the parameters with which I have looked at Gabriel. Maybe the market cap of the company is closer to about 4,000 odd crores, and the profit figure could be somewhere around 200 crores for this year. But post the entire expansion and the new product that comes into play for Gabriel, I think the numbers of the company will dramatically move up by about 50-60% in a short period of time of about 2 years. So the traditional earnings plus the added growth is where the re-rating will happen because of the things that they are doing now. So that's one of the ideas with which I have worked upon, and we like it, and so we invested in the company. That's one of the thoughts, Shailji.
Of course, as an investor and a viewer, should you want to add the stocks that Sunil has in his PMS portfolio, here's a simple advice. Please also take another independent view. These are stocks that Sunil is discussing on from the point of view of an educational exercise as to how he looks into it, and his disclosure is absolutely clear. He's purchased them for his clients. The other issue that I wanted to highlight is that almost every single stock that we discuss is already at a record high or near a 52-week high, 3 or 4 year high. So with the requisite understanding that these should be purchased in a piecemeal manner via a systematic investment plan, 10, 12, 13, 15, 20, 50 shares each month till you reach your desired quantity, and it will also correct over a period of time, so you will have a better average. And all these stocks have to be held for a minimum period of 3 to 5 years. That's the background with which you should keep Sunil's view in mind. So Gabriel India, the biggest and the largest shocker maker, the ones that you find in your two-wheelers and four-wheelers, is now looking up at the sun and making sunroofs. This is one idea that you have, Sunil. Any more that you would like to share in the mid-cap to small-cap space?
Yeah, Shailji, thanks for that welcome disclaimer. And yeah, that's really important for all the listeners and viewers to keep in mind before acting on anything. One another business idea where I think a lot of things will happen will be the wind power business. So as a country, we are migrating from the thermal power generation space and getting into wind and solar on the renewable side. So this particular opportunity is going to be a big thing which will be there in terms of the earnings growth which can happen. And in that, one of the companies that can be looked at can be Inox Green. Now, Inox Green is in the business of wind power operation and maintenance. The company is currently managing or taking care of about 3,000 megawatts of windmills across the country. And that 3,000 megawatts, as per company's guidance in the presentation, they are talking about incremental growth of 1,000 megawatts every year for the next 3 years. So that 3,000 megawatts has the potential to become a 6,000 megawatts. And on the current 3,000 megawatts of windmills that they manage, they've done an EBIT of about close to 100 crores. So if the windmills that they manage goes up from 3 to 6,000 crores, there is a high probability of the earnings of the company also moving tandem in line with the growth in the top line. So that's something which one can keep a watch on. And the market cap of the company is very small in terms of 2,100 crores or so. So as I stated, we should look at any kind of abnormal growth which will happen. And this is one company which is talking about doubling its revenue over a 3 year period in a staggered manner. So investment requires time, and from a 3 to 5 year point of view, if the investment is done taking into consideration the market volatility and the stock price volatility, it's something which one can look at while investing. Obviously, doing the homework and reaching out to your advisor is the right thing as well. So Inox Green is one because I think in windmill and solar, government has allocated almost 5 lakh crores via power finance and REC, so that we transit to the renewable energy business at a much faster pace. So those are tailwinds for the sector, which will provide the necessary impetus of growth, and that's the one which one can look at.
Absolutely, and the English idiom of having wind beneath your sails perhaps falls absolutely accurately and correctly on Inox Wind. Again, remember the stock is at a record high. We really can't help this because the markets themselves are at a record high, and it's appreciated fairly quickly. It was at about 40 rupees in the month of April to about 72 now. So with the requisite checks and balances that you have to look at stocks in the longer term, this one is in a sweet spot below 100 rupees, market capitalization of about 2000 crore rupees, very strong tailwinds both in the sector as well as in the company, and a fairly decent sized expansion lined up for the next 3 years that will boost earnings in a similar fashion. So we have Gabriel India and Inox Wind as one mid cap and one small cap pick from you, Sunil Bhai. Any more in your how should I say treasure box?
Well, Shaiji, I guess one another company which we have liked, and of course it's again gone up to record highs in a very short period of time, is Anand Rathi Wealth. Anand Rathi is in the business of providing financial services to ultra HNI customers. What I liked about the company was the process in which the company is selling the financial services space. As being in the market, we have seen so many people sell so many financial products without understanding the risk or the return requirement of the client. So Anand Rathi Wealth has done exactly the right thing in terms of providing the right customer the right product. What they have is a bouquet of products with which the return requirement is classified in four categories of 12, 13, 14, 15% return, for which they provide mutual fund opportunity, and they have a bucket of structured products as well. Now, the AUM that they address to is something around 43,000 crores. So the process at which they want to sell the product, the RM, the relationship manager, is restricted of going and selling anything to the customer. So that's one of the very important things in the financial service space. And the structured products which are there create the necessary alpha in terms of return generation. So my sense is the 43,000 crores of AUM that they have will grow at somewhere around 18 to 20% comfortably, 13, 14% being the return that the market provides. And the incremental growth is in terms of the clients building up their AUM and the new RN business that they procure. So for me, this company, which can grow comfortably at 18-20%, is where Anand Rathi is placed. I think the market cap of the company is closer to 6,000 crores. And the profit figure, which I personally believe would be somewhere around 250 crores for this year and growing at about 20% over the future period. Again, it follows my sweet spot of high margin, debt-free status, very high ROE, return on equity ratios, and that's where if the growth is at 20%, I think the PE expansion can also happen. So that's on Anand Rathi. Again, as Shailji would also mention that the stock has dramatically gone up in the last 3-4 month period
Yes.
from a very low price to about 40% up or so. So again, all these things are, please be careful about investing and do your homework, take independent decision, and obviously look for the long term. So yeah, Shailji, that's one of the other ideas that I have.
Yeah, so Sunil Bhai, we just had Mr. Anand Rathi from the company on an earnings con call with the Business Today Television, and he also mentioned a lot of good things that both the company as well as the broader markets in general would have over the next 4 or 5 months. And kudos to you. If you can't beat your rivals in terms of their business growth compared with yours, you might as well also buy their stock. So their growth also becomes your growth. With those checks and balances, these are the 3 stocks that we've discussed. Anything else, Sunil bhai, that catches your fancy at current levels?
One of the stocks again, I think can have potential could be the darling of the market is Suzlon.
Yes.
Suzlon is one which has also turned around from whatever the ills in the past were there. Their new 3 megawatt windmill has been liked very much by the customers, and the orders are really flowing in for the company. Company with its QIP has become a debt-free company. And to my mind, this company, because of the tailwind in the sector, just like Inox Green, where I spoke about all the positive tailwinds of the sector, same apply to even Suzlon as well. So this is another company where some money can be made. The stock again will be very volatile, given the kind of run up that it has had in the recent past. And again, the 3 megawatt is like the order book of the company, which was closer to 900 megawatts by March 23. In the first 5 months of the year itself, almost 90% of that order has been received by Suzlon. So the customers have also well accepted this 3 megawatt windmill line and are flowing the company with orders. Operating leverage will play in, financial leverage will start coming in. And again, it comes in my checklist because of the debt-free status that the company will attain very soon. So that's another idea where investors can look at it. Investors need to be very careful because from a 3-4 rupees, it has already gone up to about 2022 or so.
Yeah.
So the run up has been there. Majority of things could be perhaps built in the price as well.
Right.
But a long term investment can be looked at.
Right. So, Sunil bhai, we've just created a graphic for all the 4 picks that you've mentioned. And would you believe it? Just hear this out. The year-to-date return in Gabriel is 47%. For Inox Green, it stands at 55%. Hold your heart. Anand Rathi, the year-to-date return is 100% return, and ditto Suzlon. So remember, ladies and gentlemen, should you follow Sunil's advice on these 4 stocks, the following guidelines need to be kept in mind. These are for the long term. Minimum holding period 3 to 5 years. Second, all of them are either near record highs or multi-year highs. So the requisite checks and balance in the form of staggered purchases need to be made. Don't buy at one go. Markets have a habit of correcting viciously, and at the same time offer you an opportunity to buy gold at the price of silver. So with these 2 or 3 points in mind, we'd like to thank Sunil bhai for a wonderful masterclass on how to pick stocks in terms of the process to be followed, and of course his 4 or 5 picks that he shared selflessly with you. Thank you, Sunil bhai, and we hope that you will be a regular on Business Today Television from now on.
Thank you. Thank you, Shailji, for inviting me. It was nice interacting with all of you. Thank you.
So this, ladies and gentlemen, was the market guru of today, Mr. Sunil Shah, the fund manager for the PMS at SRE Equity. Remember, we also have another series which is Market Masters that takes place once a week, and a very, very well-known fund manager, Mr. Ravi Dharamsi, will join us on Saturday, will join us on the coming Monday, and you have this opportunity to ask any query that you have on sectors, stocks and the sense of market in general to Ravi bhai, and send us by 4 p.m. This Saturday, so that we have the time to process them and send the questions to Mr. Ravi Dharamsi, who will come prepared by Monday to take those queries from you. So that's it, ladies and gentlemen, on Market Guru. Do remain glued with Business Today Television for all your financial as well as educational needs on the market. And it's been a pleasure over the last 25-30 minutes to listen to Sunil Shah on his stock picks and how to create a winning portfolio. Good evening and have a nice day.